On the 4-hour chart, stocks have held a crucial support and rallied, and I think the road to new records are now quite open. The reason why I'm saying this is because some of the key sectors hit an all-time high, namely materials, energy, industrial, staples, as well as some of the industry groups such as regional banks, transport, Dow Jones, and Equal 8 S&P 500 all hit records this week. Bitcoin is down over 39% since the latest announcement of entry of Bitcoin into a bear market. A bounce is likely, but the road down is much more easier, I think. And we'll look at precious metals as volatility against the dollar is quite high and the dollar is attempting to recover. All this and more in today's edition of MasterChartsTrading.com. Market recap for Friday, February 6, 2026. As always, please remember to hit the like button, share this video, make a comment, put a smiley face in the comment. This will make the YouTube algorithm think that this is an important video and show it to more people. Thank you for all of the likes and the comments. And if you're a subscriber, stay tuned. We'll be covering various securities such as ETFs, large cap stocks, as well as several of the speculative securities that I sometimes haven't even heard about. For example, Tronox. It turns out that this is a titanium firm and it's breaking out. Several of the psychedelic firms and some of the new ones such as Olin Corp and Huntsman Corporation. So stay tuned. If you're not yet a subscriber, consider signing up by going to the link in the description. As always, I'm going to be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart, this green, blue, red, and yellow line. They are available for this interface, tradingview.com. You can sign up for them and then get my indicators on your chart. Okay, let's look at S&P 500 first. So we had 3 down days and one really big update today. We're very close to records. If we want to look at more granular part or the granular definition of the current stock market picture, let's look at this 4-hour chart. So this 4-hour chart for security called US 500, ticker symbol US 500 from Capital.com, is a continuous security similar to the futures, S&P 500 futures. And this is a 4-hour chart. So each candlestick is 4 hours worth of activity. So notice on this chart we can see every time we close above the blue line, that would be our signal to buy. And so far it's been working quite well. So notice on the latest potential opportunity. So again, don't forget this is a 4-hour chart. So notice this latest wave from a high on the 2nd of February to the low on 5th of February. But notice very interesting that we actually did not break below this yellow support resistance line. We kind of hammered through it 3 times, but we actually didn't close below it. So this is telling me that the selling pressure was not terribly high, and then again we rallied back above the blue line right there today on the 6th of February, and we were able to close above it. So I'm expecting at least a push towards records, and if we break to new records, I think this what we call a short squeeze will unfold. So short squeeze would imply that those people who traded S&P 500 and they thought that this is it, this is the high, they sold it short, for example, here. They put their stop somewhere, and they usually put their stop, above the previous highs. So somewhere around 7,020, 7,030. So if we do close above the previous records, I think those highs obviously will be taken out, and people who put their short stops up there will be also forced to cover. So this is what we're looking for right now. Like I said, the short-term chart is showing that very likely we will at least attempt to make records. And on the longer-term chart, on the daily chart, if we break above the previous records, I think a short squeeze will unfold and we'll start again making incrementally higher highs and higher lows. So definitely I don't see any broken trend. Yes, Anthropic released this something or other, some new tools. ChatGPT was able to do this a while already. I mean, I used ChatGPT. I could have done what Anthropic is claiming to have been doing, all of a sudden better for the past 2 weeks. So yes, definitely Anthropic isn't as good AI as ever, but ChatGPT is just like, if not better, just as good if not better. So yes, definitely software companies are coming under pressure. Here's IGV, which is a software sector ETF, definitely under severe pressure. In fact, it entered the bear market just yesterday actually. So yes, software under pressure. Does it mean that the entire stock market will now collapse? I seriously doubt it. There is really no indications of that, and I'm about to show you why. For example, here are some of the sectors that have made an all-time high this week. This is XLB, basic materials, so we can look at weekly chart on a longer term time frame. So here's XLB at all-time high, record highs. So XLB is basic materials, not a big sector, but it's still a sector within the S&P 500. This is energy, XLE, also an all-time high that was just made. This is XLI, industrials, with things like XLI would be about 8% of the total S&P 500. So far I said energy, it's 4%, materials 2%, XLI industrials 8%. So far we got 12% or so of the S&P 500 that made records. XLP, consumer staples, I think another 10%, about 6%, so about 18 total. So far about 18% of sectors made an all-time high for the S&P 500. Additionally, we see some of the industry groups also making records. This is a very, very diversified industry group. This is regional banks, so ticker symbol KRE. This is very, very diversified, and lots of small and medium-sized banks that are in this ETF. So if this is making record highs, well, this is pretty good news for the economy, I think, for the American economy, obviously. This is also an important piece of the puzzle. This is IYT, transportation sector. So Dow theory states that for the records, for the bull market, I guess, to be confirmed, both Dow Jones and the transportation sectors need to be making record highs, or at least higher highs, about the same time. And so we are seeing transportation just made a new record. And Dow Jones, this is again confirmation of this, how broad this market rally is. Dow Jones Industrial Average just made an all-time high. And finally, RSP, also known as equal weight ETF, so 500 of the stocks within the S&P 500 in this ETF are rated equally, and we just made the record. So this just shows again that all 500 stocks, or vast majority of 500 stocks, are indeed participating in this rally. So to get back to my original point, yes, we are seeing some pressure. We're seeing some lows. IGV, for example, this is software companies. Yes, indeed, they are under pressure, but that does not mean that the entire stock market is about to collapse. I do not think that. Let's look at the recent alert. So I recently sent out an alert for Bitcoin. So Bitcoin has entered a bear market on November 17th, 2025, last year. How do I know? The only thing I really need to know is whether or not a security, in this case Bitcoin, has closed below this red support resistance line. So for Forex, continuous securities and commodities, we use those blue and red lines. And for the stocks, I use the yellow line as the stop. For when we're trading such things as Bitcoin, we sell below the red line, short below the red line, and then the vice versa, we buy on close above the blue line. So right this instant, clearly we're seeing a bear market for Bitcoin. And once again, how do I know? It started right there on November 17th with a close below the red line. We had several opportunities to sell it short. And for example, you can see it above the high above the red line, and a close below the red line is our trigger to go short. And latest opportunity right there on the 14th of January. This was a 39% drop. This went from 97,000 to as low as 60 or 59,000 even. This is a huge drop. Okay, so if you were able to buy puts, and you could have done it on things like IBIT. See, you could have done very easily bought puts on IBIT right there where I'm hovering on January 15, 16 for a super nice move. For IBIT went from almost $54 to about $35. So you could have made easily double your puts, or maybe even more. It would have been just a very nice run. If you are able to open short on Bitcoin, there is a chance we might be strongly recovering now. So nice big candlestick today. So potentially I would at least take some profits at this point. However, as I said before, Bitcoin is in a downtrend, Ethereum is in a downtrend, Solana is in a downtrend. Pretty much all of the cryptos are in a downtrend. So think about them not as a something to look for a bottom, but something to look for opportunity to sell short on any rebound. Let's move on to dollar and precious metals. Here is dollar currency index, DXY. So we had a 3 or possibly even a 4-year low right there on January 27th. And then we rallied almost immediately back up. So I was almost, from the start of this drop, I was not 100% that we're going to collapse here. So number one is this gap between the 23rd of January and 26th of January. So we gapped down. And when we gap down next to a what I think is a end of the downtrend, we usually see some sort of a gap or some sort of a exhaustion climax, selling climax. So I think this was it. So we had the gap and then a drop into 27th of January. And immediately, next several days, we closed this gap between the 23rd and 26th of January, and then closed back above the yellow line. So I think dollar is actually had what's called a false break to several multi-year lows, and now I think it's back up. So there is a strong possibility that we're done with dollar drifting downwards. And the reason why I think that is the way gold and gold miners have been behaving. Here is gold now. Several days ago, again on the 29th of January, last Thursday, I pointed out this giant candlestick. This one right there. From the 29th of January, it was a very large amplitude with rejection signs at the top, so tail out of the top, red body. And then the important thing is next day we had a huge confirmation, big, just giant drop on the 30th of January, and then another follow through to the bottom next day. So far, even though technically speaking we did have a buy signal, I would not be buying it right now. I want to be waiting. I want to wait and see what happens. One of the reasons is the way the silver is acting. So let's look at silver first. before I move on to gold miners. And here's silver. So also technically speaking, we do have a buy signal. However, do not want to take it. So buy signal occurs when we have a low below this blue support resistance line, and sometime later followed by a close above it. So we did have that right there on the 4th of February, on the Wednesday of this week. But then next day, yesterday on 5th, we had a big drop, and actually today we almost touched the bearish levels around $63, marked by the red line. So I want to wait and see where this takes us, especially, like I said, if the dollar continues to strengthen. It's currently at resistance, first resistance. I don't know if this is going to be enough to stop it. I think we're going to continue higher. So if dollar continues to strengthen, we could see a turnaround for the dollar, especially if or when it gets to this blue support resistance line. And notice that the indicators are curving down, so we're going to be closer and closer to that level within the next few weeks, actually. So let's keep watching where this takes us. I don't know if I seriously doubt that gold and gold miners are done, with this giant volatility. This is gold miners, GDX, also all-time highs on the 29th of January, and then big drop and kind of sliding since. So not a very reassuring chart. I want to wait and see what happens, and I'm not sure I really want to touch gold or gold miners right this instant until we see something more clear for the dollar. Head over to MasterChartsTrading.com, click on sign up. So sign up again, I have the trading indicators. So trading indicators are these lines on the chart, these green, blue, red, and yellow lines. They are available for this interface, TradingView.com. This is a TradingView.com interface. You only need a free TradingView account. Get a free TradingView account, come back to my site, MasterChartsTrading.com, sign up for one of the indicators packages, and I will open the door for you on TradingView.com. Yes, I know it sounds convoluted, but that's the only way we can do it, and you can enjoy my indicators for ages. Newsletter. So I have two packages. One is newsletter and one is newsletter with indicators. I already mentioned this on multiple occasions. The newsletter will be experiencing an upgrade very shortly. I wouldn't say within a few months, where there will be a greatly expanded opportunities to trade. Especially you will be able to set your own lists of tickers, list of stocks, as well as possibly international non-United States stocks that might be offered. So newsletter pricing will be going up, so I would suggest you sign up now for either a monthly or a yearly plan. So again, a yearly plan, you get 2 free months off. All of the plans, you get 2 free months off if you get the yearly plan, and always 7 days free trial with every single plan. So don't forget to do that. Sign up. That's it for this week's recap. Let me know if you have any questions. Don't forget to like, share, make a comment on this video. Thank you for watching. Have another great trading week. Bye bye.